And I know that
I think that we started. Thank you very much.
Thank you. Thank you. And I know that the topic we are going to have right now is quite tough after the lunch, but I think that we all will do our best to persuade you that behavioral economic and behavioral public finance is really important issue, and that mathematics is also very important for lawyers, because I think that Svetislav just mentioned before the lunch that he went to study law because he didn't like mathematics. But I think that every lawyer in this room can agree with me that mathematics is important also for lawyers. So this panel is going to be a bit about the mathematics, as there is a majority of economists in the panel, only one lawyer. But I think we will do our best to present the things in an easy way to understand. I would like to start to talk about the role of the behavioral effects and their importance in the research, going back to 2008 and the financial and economic crisis, which the economists were not able to indicate and to forecast. And the reason why they were not able to forecast that crisis was that we have been still using the models which were far from the reality, because we have been expecting ceteris paribus, we have been expecting that the GDP is not changing, the number of population is not changing, and in fact all those prediction models were quite far from reality. And since that time, the role of behavioral effects in economics started to really grow and started to be more important, because all the measures all the models we are using now expect that people are behaving in certain things, and the economics has to react with other sciences. Economics needs to become an interdisciplinary science, because application of only purely economic models does not have any sense anymore in such a developing environment. Therefore, we put together the panel with the scientists and researchers who are dealing with interdisciplinary issues in the economics and public finance. I will start from my right. I would like to introduce Dr. Lukáš Moravec from the University of Life Sciences in Prague. And today he's going to talk about how the companies settled in offshore are changing behavior when there starts an exchange of the information between the countries. Another speaker is local speaker, Professor Saša Ranđelović from the University of Belgrade Faculty of Economics. And he's going to talk about tax morality, if I'm right. The next speaker is going to be Dr. Barbara Kolozs, and she's the president of IFA Hungary. She's the only lawyer on the panel, so she's going to speak your language. And she's going also to speak about tax morale in Hungary. To my left is sitting Professor Branko Radulović, also from the University of Belgrade Faculty of Law, but he's an economist himself, and he is also going to speak about tax morality. And my name is Danuše Nerudova. I'm from the Mendel University, Brno in Czech Republic. And I'm going to speak about the behavioral effects and their application in case of introduction of common corporate consolidated tax base in the European Union. So, Lukáš, the floor is yours.
Great. Thanks a lot, Dana. Should I take the place over here? Or
No, that's not that one.
can I manage the presentation from here?
Sure.
hello everybody.
Just switch on the mic.
Thanks a lot. Should I say it again? Hello everybody. So, I would like to share with you our research relating the behavior of the owners of the offshore companies located in different jurisdictions after the jurisdictions started information exchange. Well, there are some known axioms relating the motivation for international tax planning. There are some studies saying why companies and individuals use the offshore companies. Nevertheless, the main problem of any study relating international tax planning is the definition of tax haven. Maybe if you check in history, you found the first study identifying the tax havens maybe 40 years ago. It was, I believe it was so-called Adam Starchild report. And it identified about 200 of tax havens. So you can say that from the point of this study, nearly every state got some tax advantage and trying to behave to be some kind of tax haven. Well, then you got some really extreme definition saying, I believe it was one of the EU studies, saying that tax havens are places where the top crimes are planned and being prepared, and they are terrible places. And today the EU was facing the creating the list of the current tax havens, and the banks got their lists also. So it really depends on the country which you are in, on your political approach you prefer, and then you identify somehow the group of tax havens. So when I come back to the research, it's always the key problem. You have to always check the group. In our case, it was pretty simple to identify the countries we are interested in. It was the group of countries which didn't exchange information. We expected the result that there was a huge shift from the motivation for the owners of the offshore companies. Let's say 20 years ago, the reason was mostly to save taxes. Today we can say that there was a huge shift. First, the structures got more sophisticated, and second, anonymity. The anonymity has increased as a really important reason. So this note, it was one of the studies, I believe it was based on questionnaires. It realized that it might be half to half, and we got about 10% remaining. And there is an MIT study presented in 2010 in Munich, I believe. It was saying that the remaining part might be really the tough frauds, but all is only estimation. So we checked we tried to quantify the impact of environment changes, and we checked the situation before the tax information exchange started. So it means when the country didn't exchange any information with the Czech Republic, as it is a case study of the Czech Republic, and 2 years later, nearly 2 years later, after the tax information exchange started. We used some standard research approach, used some regression. You can consider it as some kind of predictive regression models, saying what's going to happen if nothing changes. This, you can see 3 lines. Before the analysis started, we picked up the countries and divided it into groups. First group, we can call it a control group. It was the one which didn't and wouldn't exchange the information. So they remained as a non-cooperative countries, and they kept the information for themselves. It's the blue line. And then we got another group of countries which started to exchange the information. And the orange line says how the amount of companies would continue increase in case they didn't sign the agreement for information exchange. So you are comparing the orange line, which is the predicted number in case nothing changed, to the green one, which says how it was in real after the agreement was signed. So you can see change in the trend, and you can see decrease in the amount of companies established in the country. So it means some country signed information exchange agreement and the companies moved away. So if we want to express it in some percentage, we can say that about 43% nearly of companies owned by the owning some companies in the Czech Republic moved away from the location where the offshore company was established and moved to another one which kept anonymity. Well, it was the result we could have expected, and on the other side we also checked the change of foreign direct investment. There happened something totally different. The number of companies decreased, so the people keeping the anonymity, they left the country, but on the other side, the amount of investment kept in the Czech Republic through the offshore companies located in the jurisdiction starting the information exchange increased. The reason is might be special for the Czech Republic, because in case you got a company established in a, let's say, offshore jurisdiction, but exchanging information with the Czech Republic, your withholding tax rate for a passive income coming from the Czech Republic to the offshore jurisdiction is changed from 35 to 15%. So you get a lower tax rate. We can call it a deal. You provide information and you get a lower tax, or you keep your secrecy for you, but you have to pay higher taxes. So, just to describe this picture, the light blue line is the control group of jurisdictions describing the amount of foreign direct investments, and these jurisdictions didn't start information exchange at the period we researched. And here the orange line, this is the line describing the potential trend of foreign direct investments in case nothing changed, and the purple line describes the real trend of the foreign direct investment coming from the offshore to the Czech Republic. So, I can conclude that the information exchange agreements works. Nevertheless, it doesn't work the way the state might prefer, because the companies are not the sitting ducks, they react. So the one who prefers the anonymity, they move away, they are searching for the jurisdictions keeping the secrecy, and the part of the investors for whom the anonymity is not important anymore, or for them is important anonymity to the business partners, family, but they don't care about the anonymity to the relating the inland revenue. They use the new situation, the decreased tax rate, and they invest more to the offshore companies with the decreased tax rate. Well, I would like to put it into the context of the MLI discussed yesterday. If we add to this research the studies confirming that the double tax treaties are one of the most important factors for accumulating the foreign direct investments in different countries, the more double tax treaties agree to have, the more incoming investments you get. I remember the first research realized by the OECD was in 2001, and then I saw more studies from Mauritius, Portugal. We do it time to time. So this is confirmed that the double tax treaties advantages are really followed. Then you can say that the MLI and LOB might affect the behaving of the corporations, but I cannot estimate how it's gonna change the environment in fact. So, thank you for your attention.
Thank you very much for the presentation, and I suggest, unless there is any urgent intervention, we collect the questions and we will have the discussion after presentation of all the papers. Yeah.
It's still not clear to me what kind of a model you use. So could you please describe what is right-hand side, what is left-hand side of your econometric model? Then, I mean, what kind of, is it pool of data? If it's pool of data, because obviously there is a time component, what was the time period?
Yeah.
And then, what is the number of observations? Because all these data are missing, and these are crucial to
I didn't involve them. I didn't involve them in the presentation.
Let us know now.
Okay. So the data are based. The periods followed by the research. The time before the signature is the year 2012. So it's the situation at the end of 2012 year. During 2013, there was a lot of tax agreements signed by the Czech Republic, and the third quarter of 2004 is the second period. So at the end of the third quarter of the 2004 is the second period called after the signature. Yeah, and the amount of countries, it was based on the list of countries not exchanging information with the Czech Republic. So we can say there was tens of companies. So it wasn't.
Companies observation is.
No, sorry, not companies, countries. My fault. Countries.
So observation is a country in time, before and after.
Yes.
And what is the specification of the model?
Yeah, on the left side you got the number of companies located in different jurisdictions in the first model. Okay. And in this, on the right side you got some, it's the standardized method. You got some dummy values describing the situation based on the constant. So we got some constant, you got some time shift, time period describing, I don't have it printed. There is about, I think about 7 explaining values. So I don't know, I'm not sure, I might have it here if you give me a second. No, I got it on the flash disk. So, it's a standardized approach called diff models, comparing, including the constant, so it means the base, without any, so the amount of companies not reacting to the change. You got some dummy values, respecting the situation in the country. You got some time period. Let's see. Yes. Time effects, clearing the ad hoc changes, and of course you got some stochastic value.
Okay.
Yeah, so it's all I can recall now. And in the second model, on the right side you got the same values. On the left side you got the amount of the foreign direct investments located, not incoming, located in the jurisdiction.
Okay. Thank
So,
you.
and you got one more question, I think. I missed, no?
Yeah.
That's more or less.
Okay,
The number of observations.
yeah. It's intense.
Okay.
We
Okay.
took, because we don't have so many, let's say, countries called tax haven on the list, and not so many agreements signed, I have to say.
Which means degrees of freedom are pretty.
It depends. It's not a standard, let's say, regression model where you have to respect this. It's a little bit different approach. But we can say, I didn't take it with me, but just this week we finished some, let's say, standard regression model. It's not based on the diff-diff approach. It's based on the standard regression function we are heading to, and it just confirmed the result with pretty high value of the index of determination, but I didn't include it in the presentation. So if you're interested, I'd be happy to send it to you and discuss it too.
Okay, thanks.
Thank you.
Thank you very much. I'm asking all those who would like to pose the question, please do switch on the mic, otherwise the interpreters are not able to hear your questions and to translate the questions. Thank you very much, and we will move on to the next presentation, which is going to be performed by Professor Saša Ranđelović.
Good afternoon. So I'm going to speak about the role of tax morale comparing to other models in describing the size and structure of shadow economy and tax evasion that we have seen as estimated in the recent empirical literature. So I will be mostly focusing on the theoretical drivers of tax morale and giving you an overview of empirical data related to this phenomenon, which I guess will be a good introduction for the more concrete presentations or evaluations dealing with Serbian data and the other countries. So, as we can see in the literature, in the Central and Eastern Europe, shadow economy is approximately by 1/3 higher than the EU average. Although these countries have undertaken significant efforts to enhance the efficiency of tax enforcement, although they undertaken in the last 15-20 years reform of their penalty schemes, and although the tax rates, nominal tax rates in these countries are at least not higher than in the Western and Northern Europe. So the question is, how come if these basic drivers would suggest the opposite, that the shadow economy is in these countries of Central and Eastern Europe is still considerably higher than in the other European countries? And in that respect, the tax morale enters into motion. So I'll briefly explain the main concepts and the relationship between the shadow economy and tax evasion, which is more or less known, and then I'll give you an overview of the two basic models, or the two basic approaches that are used to describe, to evaluate the size of shadow economy and tax evasion. Then after following on the second one, on tax morale, which arises from the family of behavioral models, then presenting a few empirical data on the CEE countries, and concluding. So as we know, shadow economy encompasses legal activities, so activities which are not prohibited by the law but which are conducted informally, so out of records, and this is opposite, this is for sure not the same as the black economy, which includes economic transactions which are illegal. Motives for tax evasion, and we have heard some interesting findings in the previous presentation. So tax evasion for sure as the probably the most important, as one of the most important drivers, but also non-compliance with other regulatory standards, like with labor legislation, environmental legislation, and so on. And after all, doing economic activity informally provides an additional degree of flexibility. So tax evasion is to extend a motivation and the consequence of shadow economy, which should be distinguished from the tax avoidance. So the basic idea, just one more sentence on this, on the measurement of shadow economy and tax evasion. As it's shadow, it's hidden. So can we actually speak about measurement? Well, I would rather say roughly estimating the size of shadow economy, and then estimating the tax gap based on the estimated level of shadow economy. And for the estimation of shadow economy, we can use different techniques, starting from data from the national accounts, or applying sophisticated econometric models, survey data, and so on and so forth. So if we have a look at this map, we can distinguish the countries by the level of shadow economy. The more red, the higher the shadow economy is. The greener the country is on the map, the lower the level of shadow economy is. And we can see that in the large part of the world, shadow economy is above 30% of GDP. In some countries, even above 45%, above or over 45% of GDP. So Western Europe, United States, Australia, the countries with the lowest level of shadow economy, and the Central Europe and part of Eastern Europe are the countries with a medium-sized shadow economy. Still, a significant number of countries from the Eastern Europe, in particular from the Southeastern Europe, are in the group of countries with a shadow economy of more than 30% of GDP. So this was basically the motivation for this presentation. Get know your enemy before you start dealing with him, right? So, and we can here see more detailed data on the OECD countries. So the OECD average is 18.5% of GDP, and this means that almost one-fifth of economic activity in OECD countries is conducted informally. Although the variation is quite large, so it's ranging from below 10% of GDP in the countries like UK, Netherlands, Luxembourg, Austria, Switzerland, to more than 25% of GDP in countries like Bulgaria, Romania, Croatia, Lithuania, Estonia, and so on. And here we can see the difference between the CEE and the rest of the Europe. So although on the graph we do not have the data for Serbia, the research that Branko, a few other colleagues, and myself conducted a few years ago would suggest that it's hand by hand with Bulgaria and Croatia at about 30% of GDP. So if you have such high level of informality in economic operations, it means that you are facing a significant amount of foregone tax revenues. This is tax gap, so this is the difference between the amount of taxes you would collect if all economic activities were conducted formally and the amount that you actually collect. So you can see this is the orange bar. In the EU average is close to 8% of GDP. That's the loss of foregone tax revenues, while in the Central and Eastern Europe it's more than that. It's closer to 9% of GDP. The difference in the size of shadow economy is greater than the difference in the tax gaps. It's because the tax rates in the CEE are lower. So why do we care about these phenomena? Well, foregone tax revenue is one of the important reasons. us being the persons dealing with taxes would say probably the most important, but not the only important. So if you have widespread shadow economy and tax evasion practice, it means violation of the level playing field. You do not have anymore the full fair competition between the companies in the market. It can induce increase in income or wealth inequality if richer people are more likely to evade. Non-declared or informal income is more likely to be used to finance illegal activities, and so on. So how can we explain such a high level of shadow economy and consequently tax evasion in general? There are two sets of models. Us economists prefer this one based on these microeconomic tools. So this is the model of rational choice under uncertainty. It's actually a model that is borrowed from the theory of crime developed by Becker in the late 60s, suggesting that a person deciding whether to commit a crime or not is balancing between the costs and benefits she or he would need to take if he goes for that option. And that's basically the underlying logic behind this model of rational choice under uncertainty, which has been brought into economic literature by Ellingham and Sandman, formalized at least in their seminal paper published in 1972. So, rational choice, why rational? They are taking into account the direct costs and direct benefits of evasion. And why under uncertainty? There is uncertainty in terms of the probability that they will get caught. So, and I promise this is the only slide with equations. So we have a few possible outcomes, 3 at least. So we have a case of full reporting, so no tax evasion. And in that case, the net disposable income of taxpayer equals the true income minus the tax paid on full amount of true income. And the second option is that she or he underreports. And there are two potential outcomes in that case. Either taxpayer will get caught, or, and in that case, this is the equation on the right-hand side, he would need to pay the full amount of taxes and to pay the fine that is imposed by the tax administration. And the alternative is that he will not get caught. In that case, he is better off. So his net income is actually the difference between the actual income and the tax paid only on the amount of undeclared income. This means that individual discussing, analyzing whether to evade or not is balancing between marginal benefits of evasion. What is the benefit of evasion? Well, the savings in the amount of tax that should have been paid, and the amount and the marginal cost. What are the costs? This is the fine that he would need to pay if he get caught. But as the probability that he will get caught is not 1, so it's actually expected fine. It's fine stipulated by the law multiplied by the probability that she or he will get caught. So as long as the marginal benefit of non-reporting is greater than the marginal cost, he will evade, and he will be increasing the amount of non-declared income. And this is the case. This is the issue actually of a rational choice. So based on this model, we have 4 main drivers of tax evasion and shadow economy. This is the level of income. So it's questionable whether the increase in income implies increase or decrease in tax evasion. It actually depends on the absolute and relative risk aversion. Then we have tax rates. The basic theory would say, okay, the higher the taxes are, the stronger the incentives are to evade. But in some cases that must not be necessarily like that. Then we have a probability of detection. The higher the probability that you will get caught, the lower the odds for evasion are, and the higher the fines are, the lower the tax evasion. So these are the 4 main drivers of tax shadow economy and tax evasion according to this model. However, if we have a look at the empirical studies, actually this is the result of a meta-analysis. So if we have a look at the result of 12 different empirical studies, and the aim is to identify the factors influencing the shadow economy and tax evasion, we can see in the list like the level of tax burden as the single important one, 35 to 38% of tax evasion explained by that factor. Then the quality of state institutions, transfers and benefits, features of the labor market regulations, public sector services, and so on. But all these factors sum up to only 62 to 65%, which means that still significant amount of 35 to 38% of the actual size of shadow economy is not explained by these factors, which means that something is missing there. So it's not only a matter of a rational choice under uncertainty, but rather other factors should be taken into consideration. And this is where behavioral models enter into motion. So it's actually extension of these neoclassical models, which assumes that people tend to pay taxes not only based on this cost-benefit optimization, but rather this decision can be driven by other intrinsic factors. We have two groups of behavioral models based on expected utility, so we have ambiguity in terms of probability of detection, and we have models based on social effects. I will not go much more into detail. So the question is whether at least some part of this difference, of this 35 to 38% of the missing explanation of the size of shared economy, can be explained by tax morale. The question is, how do we, first of all, how do we define tax morale? So, most common definition is that it's a sort of a set of intrinsic non-monetary motives for taxpayer to pay taxes, which are not incorporated or encompassed by the expected utility models. So these are drivers beyond these four rational choice drivers: tax rate, fine, probability of detection, and the level of income. And that's the term actually introduced into the literature in the early 60s by Schmolders. So empirical studies suggest that in general tax morale explains 20 to 30% of variation in the level of shadow economy across the countries. This was the study of Togler and Schneider from 2009. And in addition, we can have a look at the data on the church tax in Germany. As you probably know, in Germany, if you are within the Catholic Church, then you need to pay additional church tax. That tax is not enforced by the Finanzamt, by the tax administration in Germany, but still tax compliance is more than zero. Some people still do pay this tax, although the probability that they will get fined, they will need to pay penalty, is zero. It means that maybe this could be a matter of tax morale. The same as with the shadow economy, the question is how can we measure morale? And this is probably the weakest link in the entire discussion of the tax morale. In the empirical literature, it's quite common to use the data from the European Value Survey or the World Value Survey. Actually, you have a statement there: tax evasion is never justified. And the survey participants should state, I agree, I disagree, or in between. So actually that answer should reflect the degree of tax morale. And here we have the overview of the results of the responses of survey participants in the Central and Eastern European countries. So in average in the CEE, close to 60% of taxpayer of survey participants would say, I agree that tax evasion is never justified, which suggests that the level of tax morale is modest. If we have a look at the left-hand side, the countries with the highest level of tax morale are Hungary, Serbia, Bulgaria, Latvia, and so on.
Hungary?
Yes.
Serbia.
Yeah. I'll come back to that at the very end of my presentation. That's one of the points. Yeah. But that's what you get from the survey data. So, coming back to the meta-analysis that I previously mentioned, that study is actually suggests that between 22 and 25% of variation in the level of shared economy across the countries can be explained by the tax morale, which means that this behavioral part, the tax morale, is an important driver of the entire level of shadow economy. So, what are the main drivers, the main determinants of the degree of tax morale? So we have a few factors, 6, 7 probably. So we have social and demographic factors, like elderly people are expressing higher degree of tax morale. Women are more prone to comply and to pay taxes to full extent. Although it's interesting to see the results of that of that paper suggesting that women are less likely to evade, but when they evade by huge amounts. Yeah. Then more religious people are less likely to, are more prone to tax morale, while impact of education is ambiguous. One would expect that educated people understand the importance of the government and therefore they're more likely to pay taxes, but at the same time, if they are actually educated, it can be that they're more critical toward the way the tax money is spent. Then we have a group of social and economic factors explaining the level of tax morale. So the marital status, employment, form of employment, level of income, and so on. The third, to my opinion, the most important one, trust in government and the quality of public goods and services. The stronger the trust in government is and the higher the quality of public goods and services are, the higher the tax morale is expected to be. National identity and propaganda, so this marketing aspect, and it's seen as relatively important. We have a paper of Slamrods from 2007 finding that in case of war or natural disasters, tax compliance is rising, other factors being constant. And this is actually one of the interesting drivers from the Serbian perspective, as we could have seen that in the last couple of years government was relying on this tax lottery in collecting taxes, and it's questionable whether it really makes sense to do so, but it actually falls within this group of factors.
Saša,
And
this is microdata.
this is microdata.
Microdata.
Yeah, microdata. Yeah. And we have a set of political institutions. If you exercise more frequently direct democracy, the more likely that the people would be prone to pay taxes. And we have a diff in diff analysis for the Swiss cantons, suggesting that in the Swiss cantons where they have referenda more frequently, the higher the degree of tax morale is. Or the stronger the decentralization is, the higher level of reported tax morale is. Then treatment of taxpayers by the tax administration. If they are treated fair, if they have a sense of equitable treatment comparing to their peers, the more likely it will be that the people will pay taxes. The stronger the perception on the equitability and of tax system is, the higher the tax morale would be. More complex tax system usually indicates to average taxpayer that, well, something messy is going on there, I don't understand what is it, so yeah, I'm not going to pay for that. And reciprocity. If I'm happy with the goods and services I get for the money I pay to the government, the higher the level of tax morale would be. And based on the European survey data, we can see now the results on these drivers for the Central and Eastern Europe. And I have distinguished here between the few. So the percentage of religious people. So in the Central and Eastern Europe, in average, more than 70% of respondents report to be religious, which is fairly high. And the second one is a trust in education. So it's fairly high trust in education in these countries, more than 60%. And these are the only drivers where more than 50% of respondents in average say yes. So we can roughly assume, although to confirm that we would need to do a more rigorous econometric evaluation, we can assume that probably the religiosity and the trust in education contributes positively to the degree, to the level of tax morale in Central and Eastern Europe, while low trust in governance, in the government, low trust in social security system, low trust in judiciary, only slightly above 30% say that they trust in judiciary system, and a low satisfaction with democracy might be, are suspected to be the factors influencing the level of tax morale negatively. There is additional phenomenon I would like to mention here, it's the issue of tax amnesties. Actually, we have a quite common practice that here and there the tax debts are erased as long as the taxpayer promise that she or he will continue paying taxes. And the empirical literature suggests actually that the incentives coming from such a practice are quite negative, that we see some positive immediate effects on collection of tax revenues, but the negative effects, the message you send to benevolent taxpayer, the negative effects of this message is in the long run the prevailing one. So here I have extracted the results on the degree, on the level of shadow economy in the Central and Eastern Europe. So we see that it's actually the study that we did a few years ago. It's in average approximately 27% of GDP. And we can see what are the countries with the highest level of shadow economy in Central Eastern Europe. Bulgaria, Serbia, Lithuania, Latvia. Well, were not the countries that reported the highest degree of tax morale. So it seems that these data do not match. And this is why I said that the question of measurement of tax morale is the most, is probably the weakest link here. As with all other survey data, it's questionable how honest people are in providing answers in this survey. I also recall one case that we had when we evaluated the level of shadow economy in Serbia. We had a survey with businesses, and we asked the question, what's the share of the revenue you're earning informally in the market? And all respondents said like 2%, 3%, and so on. And when we put the control question, what's the share of your competitors' turnover earned informally, they would say 35%, 40%, and so on. So it's questionable whether we can only rely on these survey data. So, and this is my last point. Considering the mentioned, so what would be the main elements or the main topics to be discussed within the policy aimed at tackling shadow economy and tax evasion in Europe? Is it about more harmonized taxes to reduce the scope or the incentives for this cross-border tax arbitrage? Tackling the issue of tax havens, exchange of information, improving the efficiency of tax administration by making use of digital infrastructure and improving the exchange of information, improving the efficiency of enforcement of tax legislation. And these are the suggestions mostly coming from this basic neoclassical model of rational choice under uncertainty. But we should definitely then add a few additional factors dealing with being connected to tax morale, like improving the transparency in terms of the way the tax money is spent, improving the quality of public goods and services financed from that money, explaining to taxpayers the role of these and the importance of the goods and services financed from tax money, and working constantly on reaffirmation of social norms and values which are more positive towards the tax compliance. Thank you.
Okay, thank you very much. Does somebody have an immediate intervention?
Just these Schneider's data have been heavily revised downwards. So it's not 31, it's just 20, for example, for most of these countries. So it's roughly 2/3 of what he estimated
Initially.
Initially.
But the difference is still the same between the CEE and the
but still absolute terms are much lower than what was presented.
It was 2016 study, I think. Yeah.
Okay, thank you. Now I would like to invite Professor Radulović, because I think that more or less you are going to continue, so it would be nice to have those two papers together.
So first I would like to really thank Saša for delivering this excellent crash course in what is...
Could you please use the mic on the left?
Sorry?
On the left.
There's
on
a
the
mic.
left. Okay.
No, that one. And you need to switch it off.
You just need to switch off. I'll probably opt for this one because it's more natural for me. Sorry. Okay. So just to reiterate, I would like to thank Saša for delivering this excellent crash course in what is tax morality although people say also tax morale, which are not the same terms. And I do think that this tax morality is much better in describing what's the essence of the topic. So I'm going to continue, and basically my research question is rather simple. I'm going to talk about determinants of tax morality in Serbia. So what drives tax morality in Serbia, and what are the key factors that Saša already mentioned in his speech just a couple of minutes ago. I'm not going to repeat, but basically we are using the same definition. What is tax morale or morality? Defined as non-pecuniary and intrinsic motivation for tax compliance. You'll find the variation of this definition all across the literature. And again, what already Saša mentioned, empirical literature usually finds that real level of tax evasion is significantly lower than forecasts made by the rational choice model, about 2/3. And we confirmed that in the case of Serbia. We definitely showed a colleague of mine, Gorana Krstić, myself, she's from Faculty of Economics, that the deterrence is key for tax compliance, but still we also find that tax morality plays a really significant role. So this is kind of continuation of this previous research. And why this is significant? Well, Saša had already one paper on topic of tax morality that was published last year, so this is starting to attract attention of academics. It's also relevant for tax authorities, because it should be good to know actually how they can influence and how to reach a higher level of compliance. What would be the policy instruments that you could use in order to probably influence this 1/3 of compliance that's not basically explained by deterrence model. Also, what's really important, I think, for this paper is just the second paper, I think, in the world, or third, depends if you look at the large sector, large corporate sector as well, that's trying to explain not individuals that Saša was talking about, like religious issues and other characteristics of individuals, but we are looking at the business sector. This is also important because if you look at who actually is the one that's paying tax revenues, at least in the first instance. I'm not talking about tax incidents, but in the first instance it's business sector. So it's really important to understand better why and what kind of corporations and businesses, small and medium enterprises, entrepreneurs are really in compliance, and how this morale is affecting this compliance. So what you can do, there are three approaches basically they can use. First is to go to tax authorities, obtain real-world data, but the problem is that you don't see attitudes. You don't know why people actually pay taxes, or those that didn't, that are fine, and you see that they are not in compliance. What was the reason behind that? You can do this by using surveys, or alternatively you can use various experiments. So you can use this behavioral economics approach, and this is starting to be really posh and interesting field of research, with some pros and cons that we can discuss a bit later. So what we do, we exploit a novel data set about 1,000 Serbian businesses. When I say businesses, I mean both businesses, corporates, and entrepreneurs or sole proprietors. Data were collected in 2007, and the paper that's most relevant to what this paper is about is a paper written by Polish and Baltic authors that was published just recently in Journal of Business Ethics, and basically looking at a sample of Latvian companies. The same authors are relevant for shadow economy field of research. Their sample is much smaller, so there is also one thing that we can have an advantage. Just briefly about the approach. So what we are looking at is basically this square on the right side. We are trying to explain what affects tax morality. What's also important to emphasize, tax deterrence also affects tax morality, because there is this bias. If people believe that they will be awarded or at least not punished, they may adjust their behavior and think that this is becoming in accordance with certain moral standards. And there are a number of other determinants that can affect directly tax morality, but also they can affect tax compliance or informality, decision to go and become informal completely or partially, doesn't matter. What we did previously, basically in our previous research, we show that this both tax deterrence and tax morality are important, both statistically and substantially. They are explaining level of informal business in Serbia. And now we are trying to see, okay, what's going on? How we can explain what affects tax morality here in Serbia? What are the key determinants? What you can do in the policy aspects to maybe affect behavior and change this behavior, although it's probably a long-term prospect. Now I have to talk about dependent variable, what's on the left side. Well, the problem is, as Saša mentioned, it's really hard to measure tax morality, but generally in the literature it's usual to use this various surveys like European Value Survey, World Value Survey, European Social Survey. Saša mentioned all of them. And there is this Likert scale type of question when you say whether something is justified or not. In our survey, because we were dealing with informality, we were not asking explicitly about do you think that cheating on taxes is appropriate? It's not appropriate, completely inappropriate, etc. But we have one similar question, which is asking businesses about their attitude to the justification of informal business activities. So basically it's the same Likert scale question, not 10, but 5. And the lower the index value, the higher is tax morale. We do believe that this reflects tax morale rather well. Why? Because we define informal business as any action taken by individuals or firms with the aim to reduce their legal tax obligations. You are either not reporting income or sales to evade consumption taxes, to evade income taxes, or you are not reporting wage-related taxes, so to evade payroll tax and social security contributions. So you are using envelope wages, for instance. So what is the model about? So we understand now what is on the left side. We would like to see what is on the right side of our model. And there are a number of hypotheses that we would like to check. What is really important in Serbia? Saša, for example, mentioned that he believes that provision of public goods is really important in Serbia. That, I don't know, what else? You emphasize several of these issues, and we would like to see, okay, whether really this, what we believe is important, businesses tell that for them it is actually important with respect to tax morality. So the first one is how businesses perceive tax authority. Should tax authority change its behavior? And there are several questions about how businesses perceive tax authority. Do they believe that they are competent? Do they believe that they are not time-consuming, etc., etc.? And then we classify this is a binary variable. Basically, that states, okay, all companies that found something about tax authority, that they complained about their behavior, that's one group, and the others that are satisfied with how tax authorities are approaching them and the relationship, they are in the other group. The hypothesis is that all businesses who negatively perceive tax inspection will judge underreporting to be less than acceptable. So if tax authorities, if tax inspection is not really kind in approaching you, not because you are behaving badly, but because of their general attitude, and you will justify your behavior, your evasion by this. Second is, what is their perception of the tolerance of tax evasion in Serbia? Do they believe that tax authorities are rather tolerant, generally speaking, not to specific groups? We are not talking about equal treatment, but generally, whether there is a perception that tax authorities will say, okay, you can go ahead with some small portion of tax evasion or whatever. I'm not going to spend a lot of time in your business premises. The second group of determinants are those that are related to business perception of how widespread evasion behavior in society is. So we have two indicators here. What is the perception of companies? How many others, Saša mentioned that question, how many others are
evading taxes? What is the percentage of tax evasion in relevant sector? And second, what is their belief? How many unregistered companies are in their sector? So we are trying to see their perception about widespread evasion in particular country, in this case Serbia. Third group, Saša I think mentioned also that, is what's the perception of fairness of tax system? So we have two simple hypotheses there. Businesses who perceive tax spending as inefficient and inequitable have a lower tax morale. And the third, 3B hypothesis is that businesses who believe that the tax burden is high have a low tax morale. This is probably not captured perfectly in a survey because we have a binary variable. So we are using those data where companies indicated that these things like high tax burden or inefficient and inequitable taxes are basically one of 3 or 5 key business obstacles. So maybe they are not seeing that as a perfect, but they are not saying that this is one of the 3 most important business obstacles for them in Serbia. Similar to this one, we have another hypothesis that's related to complexity of how complex it is to pay tax. And this may result in either intentional or unintentional non-compliance. So we have hypotheses that businesses who say the tax laws and rules are complicated have a low tax morale because it's too complicated. So it's justifiable that I'm not going to pay all taxes. I don't want to spend that much time dealing with my tax obligations. Now we are coming to this public goods explanation. So businesses' trust in government, public officials affect their willingness to comply. So those businesses with low trust in government's intention to curb tax evasion, there was an explicit question about this. Do you believe that government is really serious about affecting tax compliance? Do they mean this seriously, or do you believe this or not? So we had this question, try to control this. If I believe that they are really serious, then it's justifiable that I'm going to really pay taxes. I'm not going to evade, and vice versa. If I think that they are just acting and this is really not serious, then why am I going to bother about? So I'm not going to pay all what I'm due. And finally, this is rather important. This is connection between deterrence and this tax morality. Deterrence factors may influence the tax morale. Tax morale may be affected by a self-serving bias whereby people adjust their norms and attitudes according to their self-interests. And there are a number of studies, obviously coming from guys from Chicago, that are trying to see actually, how people are trying to justify their behavior, how they are going to change their behavior because of self-interest, and then they are going to say this is because of morality, because this is I'm a moral person, so I'm going to do this because of my high beliefs. And there are a set of hypotheses here. Basically, they are trying to link this morality with deterrence, with perceived penalties, and also whether you are able to avoid penalty by paying bribes. So these are 3 additional determinants that we are trying to look at. This is not all. We are also looking at a number of other control variables. So this is where findings are excellent and interesting, I would say. We are looking at binary variables or that are explaining whether you are looking at entrepreneurs or companies, whether you're looking at loss makers or profitable companies. So who is more moral, like loss makers? So because they have to survive, so they will justify why they are not paying taxes.
So these are dummies.
Dummies. And you have then foreign mixed ownership versus domestic. You have VAT versus non-VAT taxpayers. You have regions, which is extremely important in Serbia. You have control variables for sectors, and also whether respondent was owner and manager. I'm not going to bother with, there are dozens of models that we try to run and to see actually what is important. What we are using, and this is like a normal thing to do in this area, you are using, because of the type of dependent variable, you're using ordered logit or ordered probit model. when you are interpreting this model, you are basically just saying, okay, it's more likely that for other things given, that this characteristics will put particular company in a higher group, means in this case less moral, because the higher this value of index, that means that you're less moral. It's maybe counterintuitive. What we can, yeah, sure.
So the left-hand side, you
Yeah.
get actually moral and non-moral companies.
Yeah, it's a Likert
And this
scale.
is-
Yeah, the
this is
higher
basically probit over these two.
ordered probit. Ordered
probit.
probit.
Okay.
Okay. Sure. Sure. Okay, I'll take just 2 minutes. So you have basically intercepts that you control for these various categories, like justifiable, less justifiable, in between, not justifiable, completely unjustifiable. So all these are important. So this is control whether you're using the proper model. So we are using proper model. You have to do this by this way. There are no issues with multicollinearity. So this is just one of the results that we had. And I'll just skip. So just for a second. For example, here, objection to TA, it's 1.97. That just means in our model that it's 2 times likely that those that are objecting to the way how TA behaves will be less moral. Okay, so 2 times likely. For those that are, this is a 10 percentage scale. For detection, it's 1.8. So for every 10% that I believe that I'll be more likely to be detected, less likely to be detected, sorry, I'll justify my tax in compliance, so I'm not going to pay taxes. What's important here? So first, business perception of tax authority is quite important. In all of our regressions, in all of our models, the way how tax administration is approaching taxpayers is really, really important. So whenever someone is complaining that they are time-consuming, that they are inconsistent in application of tax laws, then you will see that this is really affecting this morality. Second, deterrence factors are also important. So deterrence, people are accommodating their behavior. So tax morale may be affected by this self-serving bias. In some of specifications, high tax burden was important. So if people perceive that tax burden is extremely high, it's more likely that they will justify not paying taxes. So this tax morality is affected. And also in some specification, not in all of them, this perception of widespread evasion, it was important. Tolerance, general perception of tolerance of tax evasion in Serbia is really important. So people, not because of the specific groups, not because of low quality provision of public goods, at least business sector, they are basically, which is justifiable because they are not the one that's final consumer of public goods. So this may be an explanation. Mm-hmm. But basically those are factors that we detect. Also, if I'm in tax administration, what I would do? First, you would say, okay, Belgrade is 2 to 3 times less moral than the remainder of Serbia.
In Texas.
In Texas. So Belgrade is like outline. In all models, they are like 2 or 3 times. Sin City, exactly. Profit-making companies are more likely to be immoral. So loss makers, maybe it's a blaming culture, but loss makers are more moral in Serbia. So they are not using tax immorality to justify, it's vice versa. Some sectors are really, really specific, like transportation sector. Like those guys are, for them, it's okay. Whatever you do to hide the tax, it's fine. What's really interesting, and it depends how you use this variable, whether you're using just for foreign companies or foreign and mixed ownership companies. But foreign companies are actually less moral than domestic companies. This is counterintuitive. And what you can say is probably, it's not the case that all companies in Serbia are coming from Sweden, Germany. There are a lot of these regional companies, like from Bosnia, from Montenegro, from Turkey, from Balkan states. Well, for them, they are not as moral as say. The problem with our results, they are not tailor-made. With our survey, it's not tailor-made, so you can maybe tweak a little and make this survey a bit improved for the next time. And it's not obviously perfectly capturing complexity of issues of tax morality. Okay, so I'm finished. Sorry.
Thank you very much. Any immediate intervention? Yes, please.
Right, thank you for your presentation. I just have a really quick question. Have you compared your basic statistics descriptives with the survey that has been conducted for many years now in the World Economic Forum in these competitiveness reports? Because then CEOs have been asked to rank what makes or what are the main obstacles for the payments of taxes or whatever else.
No, but I have to be honest, and I do not see that this survey is representative. So I would, it's basically not representative. It covers only large sectors, basically. You're not asking small and medium-sized companies, that's one thing. And also, it's rather biased, so I wouldn't use it. Actually, I just have one comment. Saša, you mentioned this World Value Survey. In one of papers, apart from 2 countries, all countries were used in a data set that compares tax morality across the world. One of the countries that was excluded from the sample was Serbia, because of low quality of data set that was mentioned. So you should be really careful about the quality of data. This is obviously this is not probably the perfect survey, but still we had a chance to control for a number of issues, and the sample is representative for Serbian economy. It's large enough. Actually, it's the largest so far in comparative literature. So we can maybe use this as just a reference, not empirically. I wouldn't use this data empirically, definitely. Thank you.
Okay, thank you very much. And now I'm going to present my paper regarding the behavioral effects of introduction of double and triple CDB.
This looks like a game, how we switch positions.
Wow. I think they are doing similar things. It was pretty interesting.
So I'm going to present our model or study on the measurement of the impacts of the introduction of double and triple CDB in the European Union. For those who are not familiar with what double and triple CDB is, it's the newest proposal of the European Commission on the introduction of a common consolidated corporate tax base. This is not the real new idea in the European Union. The proposal already has been on the table in 2011, but in 2011 it was the proposal to introduce that concept obligatorily. However, in 2016, the Commission was back with the proposal to introduce this common consolidated corporate tax base only for the companies, only for the group of companies whose turnover in the group is higher than 750 million euros. And the Commission also proposed to implement that in 2 steps. The first step is so-called common corporate rules. It means common rules how to construct a corporate tax base. And the missing consolidation element should be replaced by the possibility of cross-border loss offsetting. And only in the second step, the Commission was proposing to implement common consolidated corporate tax base. This proposal went already to the European Parliament, and our research team was asked by the two general reporters to those two directives by Mr. Lamassoure and Mr. Tang, and we were very closely cooperating on the proposal of the changes, and we have been simulating all the impacts which might be connected with the suggested changes to the proposal in the European Parliament. So I will share my experience with you, and I will lead you through that the behavioral effects are really extremely important because they might have a vast impact, and the results of the simulations can be completely different than you have expected. So what was the aim of the research? First, the aim was to quantify the impact of the introduction of the cross-border loss offsetting. That is the instrument which is Commission suggesting in the first step. The Commission is suggesting that the companies with the turnover in the group higher than 750 million euros could be able to access or to reach the cross-border loss offsetting. And in the second step, or the second aim, was to quantify the impact of the application of the consolidation regimes, which means that the groups of companies who would be acting throughout Europe would share the group tax base, and this group tax bases would be allocated to each individual member state based on certain key. And we have been calculated the impact of the implementation of that key. And very important, third aim was to take into account changes in behavior of economic subjects, which means that, of course, when this is going to be implemented and it's not going to be obligatory, and the companies will have the choice either to enter or not to enter, just to try to simulate how many companies are going to opt for the system and how many companies are going to join the system. So the departing point for the behavior model was taken from the behavioral economic studies, and that's it, that those impacts are influenced also by psychological and social factors, and those factors are influencing the decisions not only of individuals but also the decisions of the institutions. And with respect to public finance, Jos Lemrod is talking about three phases of behavioral public finance. The first two phases are just the classical theory of public finance, which means that on one side we have government expenditure, on the other side we have revenue-raising aspects. But the third phase of behavioral public finance is that government try to act to modify the behavior of the people, which I don't mean that it's the imposition of sin taxes, but government try to induce the subjects to behave more appropriately through the fiscal mechanism. In our research, we have been trying identifying three groups of companies. The first group of companies were companies that would enter into the system obligatorily because their turnover in the group is higher than 750 million. And then we have identified the companies which would be large companies but wouldn't be meeting that threshold. And the third groups were companies, small and medium-sized companies, which would have incentives to enter these systems. And I'm going to talk about the methodology, but not in details. Just a brief overview of the methodology, of course, that to be able to calculate the allocation of partial tax bases into the member states, we have used the micro databases, Orbis and BankScope databases. We have been researching the group taxation schemes throughout Europe, and we have found out that still there are 8 countries in Europe which are not applying group taxation schemes. Those of you who are working with Orbis or Amadeus or any other database knows that a lot of information is missing. You usually open the financial statements and there is nothing, or at least the most important values are missing. Therefore, we also perform statistical methods how to impute the missing data. And we also performed a sensitivity analysis, which method for missing data imputation is suitable for which country, because it's always influenced by the character of missing data. And the very last equation on the slide is the equation or the key based on which was suggested in the directive which was passed to European Parliament, that the group tax base should be allocated. And it should be allocated based on the sales, based on the payroll, based on the number of employees, and based on the assets. However, currently it has been enlarged by the factor which should reflect the digital presence of the company in the country. We have defined the incentives, as I've already been mentioning, which would let companies to enter into the system. The first which we have defined was very low compliance cost of taxation, because they would have only one principal who would be communicating with tax authority and so on. They would have access to cross-border loss offsetting, which currently small and medium-sized enterprises do not have, contrary to the large enterprises, because large enterprise can reach that through appropriate transfer pricing policy. Super deduction for R&D can be another incentive. Fair tax competition, again, it's quite a huge incentive for small and medium-sized enterprises, because at the moment a lot of them are not able to calculate effective tax rate, which means the tax rate they are really facing, not the nominal one. Another incentive could be the elimination of tax obstacles to mergers. And of course, the elimination of transfer pricing issues, because if you are acting as one single entity, there is no transfer pricing between the separate entities within the group. Of course, that I need to talk about the limitations of this study. The first one is that we are still taking into account the same volume of the corporate tax base in the EU, because at the time when the study was conducted, there was no information on it. It is based on 1 year data, therefore we has not been able to reflect the recapturing of the foreign loss offsetting as is suggested in the directive. We used profit before taxation to equal to the tax base, because that's the only information you get from Orbis database. The sales factor is based on country of the source, not on the country of the destination, again, because there is no micro database which would comprise data on sales by destination. And we omitted micro entities from the research because they're not comprised in Orbis and BankScope database. And this is what I would like to show you. Those are the results. How many companies within the groups would have to enter obligatorily because they would have been meeting the threshold? Yes, there is more than 90,000 large companies which would enter into the system. In the group of large companies not meeting the threshold, there would be 14% having incentive to enter common corporate tax base. It means the first part with the loss, cross-border loss offsetting possibility, and 35% having incentive to enter triple CDB system. And within the sector of small and medium-sized enterprises, it would be nearly 7% to enter double CTB and 6.5% to enter triple CDB. This is another type of the results which have been produced for members of parliament. The first one is the absolute amount of tax base or tax revenue which would be possible to gain from the imposition of 003 CTB in case that it would be obligatory system. What you can see that even if it wouldn't be obligatory and there would be the threshold, you would gain more. The tax revenue would be higher. And the last one is the simulation when the threshold would be 40 million, which in fact finally is what is European Parliament is suggesting, that the threshold should be lowered to 40 million. But I will show you another slide, because the members of Parliament, the rapporteurs, was telling us, okay, let's do it for small and medium-sized enterprises. But the medium-sized enterprises, they have a lot of incentives to enter, but they have a lot of cross-border losses situated in different countries. At the moment, they don't have enough financial and human capital to do tax planning, the proper tax planning, and to use a transfer pricing policy. Therefore, you can see how the tax basis would be decreased if small entities would enter into the system based on the incentives. And you can see in triple CDB, it would decrease the overall tax base in that group by 58%, which is really a huge impact, and it's necessary to take into account those behavioral effects when the Parliament or the Commission then will introduce the final shape of the directive, because not taking into account those behavioral effects and those incentives to enter into the system can change the results of the implementation. And another issue which will definitely change the picture is Brexit, because 30% of the huge companies, of multinationals, are situated in the UK, and 1.3 billion of foreign losses is situated, in case of small and medium-sized enterprises, is situated in the UK. And those are the things which are going to be cut off from the system, because they're not going to be the part as the Brexit will really occur. So that's everything from me. And again, I'm just taking an immediate intervention, if there is any, and then I will pass the floor to Kolozs. So if
Can I have one?
yes.
Because I was interested, because I know you had an intervention in the transfer pricing panel, and now from what you're saying, I just wanted to, basically to understand, the small and medium-sized enterprises that you have encountered, they deem transfer pricing as a heavy compliance burden, something which is really, something they don't, what they think is the preview of big multinationals that they don't want to deal with.
Well, before that research, we did the distribution of foreign losses of all the groups, and there are hardly any in case of multinational. Why? Because of profit shifting, probably. But they are quite huge in case of small and medium-sized enterprises, which shows that they are not able to do profit shifting, they are not able to do appropriate transfer pricing policy, because they don't have the knowledge for that.
So essentially, if we would introduce, and I'm going back to the initial idea, if we would give them something where they would get safe harbors, which would probably not allow them to make much savings, but would do away with the compliance burden, they would be quite happy.
Yeah, that's another part of our research, and in 2 weeks on the conference in the Czech Republic, I'm going to research I'm going to present the proposal on safe harbors for small and medium-sized enterprises.
Thank you, then we are of one mind.
Okay, and now I'm inviting Kolozs to present about tax morale again.
Thank you. It's fine. Okay. Thank you. As you might have noticed, like an average participant at a conference ages during 2 days like 1 year. An average speaker ages 2 years. and an average organizer age is like 5 years. So first of all, thank you, Sir Stjepan Gadžo, for organizing this conference, and it's been a wonderful event. Thank you so much. So first of all, I would like to say that I am not an economist, I am a lawyer. And I would like to start my presentation with one of my best movie scenes. You might have known this thing. Here you go.
Assault, arrest, resisting arrest. We got a collection agent for the mob. 2 of these guys have done serious time. Look, they're the best at what they do. So am I. And I'm not so optimistic. We spend $250 billion a year on defense. And here we are. The fate of the planet is in the hands of a bunch of retards I wouldn't trust with a potato gun. So what's the verdict? They'll do it. They've made a few requests, though. Such as? Yes. So a few things here. Nothing really big. Just, well, as an example, Oscar here has got some outstanding parking tickets and wants them wiped off his record. 56 tickets in 7 states. I'll tell him, Oscar. You got it. Okay. Noonan's got 2 women friends that he'd like to see made American citizens, no questions asked. Max would like you to bring back 8-track tapes. Not sure if that's gonna work, but let's see what else. Chick wants a full week's Emperor's package at Caesar's Palace. Hey, you guys wouldn't be able to tell us who actually killed Kennedy, would you? Bear would like to stay at the White House. White House. White House, yeah, he'd like to stay in the Lincoln bedroom of the White House for the summer. Stuff like that. Sure, I think we can take care of some of that. Harry! Yeah, one more thing. None of them want to pay taxes again. Ever.
So, yes. So what is this? What is this hatred against paying taxes? Like, okay. So why is that people don't want to pay taxes? What's wrong with the taxation? What's wrong with tax morale? And what is this feeling against taxation? So first of all, I have to say that tax morale is a decision made by the taxpayer based on their personal feelings toward the government and the society. So how I see tax morale is, I'm a lawyer, by the way, so I'm a different animal here in this conversation. So how I see tax morale is that, like, there is an individual who is paying taxes by himself or herself, which basically excludes the possibility of using the pay-as-you-earn like system. Like, there is no withholding, because as soon as there is withholding, the taxpayer does not have the opportunity to choose anymore to pay taxes or not to pay taxes. So it's basically decided by the employer that the tax is going to be deducted. So as far as I see tax morale, it should be an individual, not a corporation, and it should be somebody who has the possibility to decide over paying taxes or not to pay taxes. To my understanding, enforcement and deterrence doesn't really work. So, I mean, if somebody wants to evade taxes, they are going to do it, no matter what. So that's how I see tax morale from my legal perspective. And basically, I went through those papers that those panelists before me just mentioned. And to me, as a lawyer, an economist paper look like there is an abstract, like 10 sentences, and there are like letters and numbers and letters and numbers and letters and numbers for 10 pages. And then in the last sentence, they say, from this data, it is obvious that tax morale is good or bad. So I just try to draw conclusions from those data, and I just try to compare them with legal possibilities and try to put the two together. So how do they overlap and what can be done? So one could decide not to pay taxes for a number of reasons. Either the system is unfair, where I typically see that it means that the tax system is not fair. So the taxpayer perceives the tax system as not being fair to him or her. The tax rate is either too high, the deduction is too much, or there are no benefits. The benefits only go to certain groups of people, so those things can affect tax morale. What I saw is also that the taxpayer can see the government is unfair. The government is unfair in legal terms mean that the public spending is bad. So the government spends the money on bad reasons or reasons that the public would perhaps need something else. So the public goods, the provision of public goods is not good enough. And so this is why the taxpayer can say that the government is unfair. The other way, or the other reason why the government is not unfair or can perceive by the taxpayer that it's not fair is because there is no transparency. So the taxpayer might see the system as non-transparent and money just goes to somewhere, but definitely not to providing public goods and services. And there is a very funny reason that I found in almost all economic research: the neighbor pays less taxes. So there is a general perception of paying taxes that she pays less taxes than me, he pays less taxes than me, and people just tend to think, at least in Hungary, that everybody else pays less taxes than they are actually paying. So that's what we see there. So we have just heard about this thing, what shapes tax morale. It comes from the economic papers. So I just read the same thing basically. What I saw that belonging to a group is a very important factor. So it's either the society, the religion, any group membership the taxpayer is worried about to lose, or position at work, no matter what. It's just the feeling to belong to a group is really very, very strong, and it can shape people's tax morale to go to a better direction. Being in a certain age, what I saw in these studies that the people are either very young when they engage in tax evasion activities, or they are either very old when they are engaged in tax evasion activities. But those people who are in the middle age typically don't engage in tax evasion. And sex, I mean, in the same way that I've heard before from Saša, that women can be like vultures. Like if they once engage in tax evasion, that's, you can take it for granted. Otherwise, when it comes to men, they either do it in a sneaky way, so you just don't realize the thing for a long time, or they just simply avoid the thing and they just don't do it. So what I try to do with all those economic papers that I read, I just try to put them onto the Hungarian situation. Like, what shapes tax morale in Hungary? And why is tax morale bad or good? We don't really know if tax morale is good or bad. We don't actually have a tax gap estimation either. And so what I found from legal studies and economic studies puts together that there is a strong legacy of communism that really affects the behavior of people. And it affects in many, many ways how people think about taxation. First of all, there were no real taxes during the communist times. So we had, we all come from the same background, that there were low salaries, and we had no idea how the government spent the money. The low salaries were the key way to keep taxation out of the equation. So people basically didn't see this phenomenon until the fall of the Iron Curtain. And they actually failed to see the link between the endless number of benefits that they received and the burden on the individual. So I think this is also a key factor to bad tax morale, that the individual is not able to see that there is a very strong correlation between the money that you pay into the government and the benefits that you receive from the government. And the other problem with this is that people started to feel less respectful towards the public goods. So they just simply don't feel respected, and they don't feel respect for the public goods. So that's also another interesting point in the equation. What I also see is that the corruption and those factors that affect the behavior of the taxpayer, that makes the taxpayer feel that the money is not spent morally, affect the tax morale either. So I think there is an incoming side of tax morale and an outgoing side of tax morale. And the incoming side is when you pay the money to the government, and the outgoing side is when the government spends the money. So I think it also affects really highly the tax morale of the people. And there is another perception in Hungary, at least. Only the poor people are caught, the rich always escape. So it's always the same issue that we see, that we had, for example, a program on, it was like a very interesting program. They tried to save the money to tax havens. And therefore the government offered a tax amnesty program for those people who saved money on the Grand Cayman Island, and so it happened lots of years ago. And it was the limit was set to like millions of forints, and then the average taxpayer would think that who has millions of forints in the bank account? Nobody. So the program was obviously designed for people who have money in the Grand Cayman Island. And well, it's just really a very, very short story. I went to the Grand Cayman Islands, not because I was saving money there or I was looking for other people's money, but it was just happened to be a bit of a tour. And there was this taxi driver, and he said that to open a bank account in the Grand Cayman Island requires to have at least $1 million. So it's not for you know, earner taxpayers who just live from one day to another. Yes. So how to raise tax morale? What do we see? What could be the remedy for raising tax morale? What we see in Hungary is that transparency and enhancing the provision of public benefits would really definitely increase tax morale. I don't know if you have heard from the news, but we have some issues with building stadiums in Hungary, and we also have like a quite well-doing healthcare system. So we would like, for example, if there would be on the other way around, like we would spend more money, for example, on healthcare system and less money on building stadiums, for example. That would be one issue that we could do. The other issue that could be done is that the level of tax legislation, the quality of tax legislation, it should be improved. It should be done better. They should make the tax laws more stable and more reliable. There was a study a couple of years ago that the Hungarian tax laws change approximately 40 times per year. This includes all the tax laws, obviously, the corporate income tax law, the personal income tax law, the Tax Procedures Act, and so on. But taking into consideration that you write an article for a scientific paper which is going to be published in a year, by that time I have to amend the article at least like 40 times because the laws change. So that would be really very good if there was more stability in the legislation and the legislation would be more firm. And then lastly, it would be really good to change the attitude of the taxpayers, like motivate them somehow, make more programs that somehow involve them. As I told you, deterrence, I don't think it really works. This article by Allingham and Sanmo from 1972, I think Agnar Sanmo withdrew that article in 1994 because he started to believe that deterrence really doesn't work in threatening the taxpayer. But then there should be another method to motivate the taxpayer to be better and to be like a more useful part of the society. Thank you very much for your attention.
Thank you very much. We have heard number of very interesting presentation, and I would like to refer to the transfer pricing panel when Marco said that he doesn't feel difference between the tax authority in developing, developed and emerging country, which I think we have to disagree with, because those tax authorities based on these results of this panel are facing completely different tax morale in the countries. Because the presenters, I think, have been showing numbers that, let's say, the smallest tax gap or VAT gap is in Sweden, like 3%. But in Bulgaria and Romania, it's something like 25%. So how it's possible? And I think it's about the tax education. I think that one remedy for the situation could be the tax education. Because in Sweden, children in kindergarten, they have the education that it's good to pay taxes, because if they pay taxes, there can be light on the street because it's paid from those taxes, and that they can have an army which is protecting, well, Sweden is not the right example, but that they have the army which is protecting the country. And if the neighbor is driving a new Ferrari, the other neighbor can check in the public registry how much on tax he has been paying, because those information are publicly available in those countries. Contrary to Central Eastern European countries, because I remember in early 90s, after 1989, it was kind of heroism not to pay taxes. People felt being hero not to pay tax, which is completely different situation. So I really do think that tax authorities are facing different environment, and it can be clearly seen that in Eastern countries, the tax authorities are usually going through the way of kind of repression, but on the West, it's the way of positive motivation of the taxpayers, which is different. And the question is whether the society in Central and Eastern European countries is prepared on the way of positive motivation. Bori?
This is actually a really very interesting issue, how to educate people to pay taxes. Like how can you inherently code in the genes to pay taxation, to pay the taxes? And I had a very, very funny story about this. Like I've been teaching taxation law since 2003, and I have been researching tax morale since 2003. So I always taught my students that the taxes have to be paid. You know, this is the basic rule. So this is where we depart from. So I just had, you know, students, and they grew up and they went to work for tax administration. They went to work for tax advisory. And so one day, one of my students calls me like 10 o'clock in the night. So I thought it's an emergency issue. So I pick up the phone, and he's on the phone, and he says, I have a problem. Okay, what's wrong? I am working for a tax advisory firm, and they asked me to prepare a scheme to avoid taxes. What do I do? And what is your answer? Because you always told me that the taxes have to be paid, and by this scheme, I'm sure the taxes are not going to be paid anywhere. So I just told him that, you know, I educated you in a way how you are, and I'm really happy that you trusted me. Now you work for the tax advisory firm. I'm glad that you recognize the problem. And I'm also going to be pretty sure that you are going to be able to figure out how to solve the issue and what to do. And even if you have to work on a tax scheme, I'm pretty sure that you are going to be great. So I tried to give him like positive energy, but I also tried to persuade him that, well, you know, you just work for a law firm, and it's inevitable to have this kind of relationship. So that's it. But education is really very important, I think. I completely agree with Dana.
Svetja?
Well, I am a little bit sketchy about the differences between societies, because I've worked in many places, and I know, you know, tax evasion is a national hobby in Belgium, and I don't think that the Swedes are impervious to tax evasion. What I think is a huge issue is that culturally, our societies have been really struggling to find the middle ground. So we've been communist societies, very much social awareness, being taken care of the government. And then we switch completely into, you know, wild liberal capitalism, in which capital is and the entrepreneur and the investor is God, and everything else is just, so we forgot about employee rights, we forgot about society. And then you have this and we feel it here as well, right? So we have the same thing, and we've had it for a very long time. Now, I also, so, you know, how many of our students know that the internet was paid by taxpayer money? It was the government investment that led to the creation of the internet. The internet would not be there unless taxpayer money was used by the inefficient government to fund it. Same, the Google algorithms were paid by taxpayer money. It was not entrepreneurs, because simply certain investments cannot be made by independent investors. You know, we need government action. And I think that it is our attitude towards our tax administrations, actually, that shows our lack of awareness about the role of the state and of the society. So, for example, we constantly hear, and I think these are ludicrous, because, you know, one of the most sophisticated tax system in the world is the US one, and it's basically incomprehensible. It's enormous, and when you have all these drives, let us shorten the amount of words in the tax code. That's not tax simplification. That, and you know, anyone can do that. It's actually getting to rules which can be understood, and that doesn't mean they have to be short. Usually that means they're going to be quite big. So but I've never heard, and I don't think I've ever heard this in any Central and Eastern European country, saying basically, well, without stable administrative framework, the state will not be able to exist. And if you don't have a sophisticated tax administration, then you have highway robbery, because this is what you paid for. So you shouldn't be surprised at the ineffectiveness of your tax system or the attitude of the tax administration if you're basically disrespecting them, not realizing the role of the administration. So I think in the long run, it'll take a long view, a change in the mindset, and and I think that here is the right place to say it. It's also our attitude toward education. You know, if there is an anti-intellectual atmosphere, it's Central and Eastern Europe, where practical application is God. We've forgotten about theory. And if you look, and I think Saša has the data, if we look at the demise of certain sectors of the Serbian society, education has unproportionately fell in quality in comparison to other sectors. This is where the drop has been more significant than in some others. So, and this also shows our attitude towards certain things. So I think it's really, it's not that we're different, it's that we're lost. And I think we should try and find ourselves. Thank you.
Yeah, and I will add it that we still are talking about the fair taxation, but we need to talk about sustainable taxation, because the most important thing on sustainable taxation is the institutional framework, because unless you don't have institutional framework, you are not able to collect the taxes. So that we should switch from fair taxation to sustainable taxation. And by the way, this is also what the Commission is feeling. Therefore, in the last report by Mario Monti regarding the reform of EU budget, you can find already that they are talking about the sustainable tax revenues and new sustainable EU tax.
And it's also very interesting, the simplest tax systems are the ones in Africa where they don't have one because they can't afford a tax administration, so you don't have any taxes. But these are the poorest countries on the planet.
Yes, that's true.
Well, thank you.
Please, could you use the mic?
I don't think there is a need for it.
Yeah, because of the interpreters.
Now, I was a bit puzzled because actually the title of this panel is Behavior of Public Finances. And there was nothing about behavioral economics in any of the presentations. So don't misunderstand me. I'm happy because of that, because I subscribe to rational choice model. And let me give you one straightforward insight of a rational choice model. Why people are not paying taxes? Because their dispensable income is higher, their consumption is higher, and their utility is higher. If you don't believe that, ask Bruce Willis. He explained that in the movie, very convincingly. Now, if we go back to the rational choice model, then we come to the issue of morality. And is morality something that is consistent with the rational choice model? I think it is. The starting point is Becker's model, and then basically the crucial component of Becker's model is sanction. It is not fine, it is sanction specified as decrease of utility. Morality is nothing but internal sanction. Call it consciousness, call it sin, depending on what you believe. But basically, this is internal sanction, which is superadditive to external sanctions like fine or like any other punishment in criminal law. So there is nothing behavioral in morality as a part of explanation of behavior of the people. This is a rational choice model, read as it has been written, because that's pretty long article. Becker's article is pretty long with all the detail. So I wouldn't, that is not inventing a wheel. The wheel has been invented, so perhaps just sorting out it a bit. Morality is something which is based in utility. So there is no need to separate morality from utility because of the nature, the character of internal sanctions. Preferences are exogenous, morality is one of the preferences, so we are talking in the classical utility maximization model under uncertainty. The second observation is more empirical / technical. That is about religiosity. One should be very careful with that data, because in the case of Orthodox nations, religiosity is basically misidentified with national identity. And then, in case of this survey, you have enormous level of being religious for Serbs and so on. And then when you come to nuts and bolts, asking, do you believe in afterlife? Do you believe in hell? And so on, it goes down. Let alone the question how often you go to church. So basically that would be my observation working with that kind of data. And I will end up with question for both Branko and you, Saša. That is a question about informal sector. There is a batch of contributions of Mark Grachstein, Haifa University. He went to the IMF for a number of years.
Yeah.
Grudstein, Mark Grudstein. So what is his main thesis is it is not the costs of being formal that matters. It is the advantages of being formal that matters. So, for example, a poor rule of law pushes companies out of the formal sector because they can get no legal protection. So it is not decreasing the costs. It is basically the opportunity cost of not having legal protection as a benefit of being formal. So I would like two of you to comment on that possible approach, which was quite convincing theoretically for me, and there is empirical support for such a thesis. Thank you.
Svetja, do we have time still, or?
Sure.
Okay.
Well, I would add also there is access to finance.
Can you switch?
So basically, you sorry. I would add to this additional benefit of being formal is access to finance. So you're going to get a cheaper credit. So this is like the subtle story, the other path. Can you just? So I do agree. Basically, it's here. We do not have specific question. Or maybe I will go through the survey again, and maybe I will think about maybe how to add these benefits of being formal, or how they can be proxied by survey, and then try to put it in the model. But I think it's almost probably it's not going to happen. It would be really difficult. But I would just add one more thing about this, all this story about morality. I hope that we didn't raise expectations about that people will become, if you do something, they will become immoral just in a year or two. The tax morality is inelastic. So basically, it will take some time, probably several decades or something like that. So what I was thinking about what results, and I will just want to reiterate this, we're saying is that you can do something by changing approach and maybe treating your taxpayer more as a client and not as a cheater. So that basically affects how they behave, they react to this. I'm not going to say my own experience, but this would be anecdotal evidence. So I also believe in this rational choice model, and we want to also reiterate this, that this is still the most dominant explanation why people are paying taxes. So both Saša mentioned, so basically it's 2/3, I would say even more. In our example, it was really, I'm thinking. I also agree with this utility base, but here the focus is on thinking about voluntary compliance and deterrence. So this is the distinction here. So basically, whether you voluntarily comply to something or you are afraid of being sanctioned for, it's really hard. Yeah. So
I think it is complementary.
It is complementary, but empirically you have to make this clear distinction. So how you're going to change your behavior because you're deterred, because you're afraid of being sanctioned by tax authorities or because of something else. And then this other part of the story that I mentioned, people are using this tax morale. I would prefer to call this tax morality, because morale is general for, we are having a morale to go to fight, but morality is a bit different. Okay, sorry.
Thank you very much. I have two last interventions. One from Lukáš. Oh, sorry.
On the comments?
Yeah, just brief, because we have two more, Lukáš and Boris.
On your first point regarding the model of rational choice and uncertainty, I fully agree. It's actually a matter of specification of the utility function. The conservative approach that is common in the literature takes into account only these income leisure preferences and the impact of the tax rate, probability of detection, and the level of tax rate on the utility. But once you put additional factors into the utility function, then you can get to the extended variant of standard of this model of rational choice under authority. Because at the very end, people consider even these ethical issues taking
There
into
is
account
actually
the impact of
augmented
their
label
utility.
sample model with
Yeah.
this ethical issue. So
It's
the
I-
augmented rational model by putting just
I would actually make a parallel to the income redistribution concepts. You have utilitarian, you have Rawlsian, who's more pro-poor, and so on, but you have also a concept of Pareto efficient redistribution. That implies that people are willing to redistribute voluntarily their income. Well, it's not because they're ethical, it's because the utility that they're having from helping other people is higher than the disutility they suffer from giving away part of their income.
Because of
Yes.
altruistic utility function.
Exactly. And regarding the question on religiosity, it's actually a very good point. I had last year a master student from Berlin who did a master thesis on drivers of tax morale, and I supervised that thesis, and actually he analyzed this issue into details, and he got the result for Europe that is consistent with the one that we can commonly find in the literature, that not each type of religiosity has the same impact of tax morale, and there is actually an order, like
Confession.
yes, a confession. So Protestant people being religious, meaning would have a stronger impact on tax morale. Then it's followed by Catholic. Then on the third place it's Orthodox, and in the Islam, being religious is most likely to affect tax morale. That's actually quite common finding in the literature. And that's here. Yeah.
Thank you. Lukáš?
Thanks, I got about 5 notes, so I will cancel them all except one because of the time. So I just wanted to mention that we were discussing the level of potential tax morale in different countries. I would be a little bit skeptical about the strict conclusions, because part of the tax gap is a VAT gap. And if I can describe the situation in the Czech Republic 2 years ago, before we implemented a new, different measures, I can say it's pretty similar to the Polish ones which are mentioned here today. So the amount of the total tax gap of the Czech Republic 2 years ago, it was pretty low. Nevertheless, the value-added tax gap in the Czech Republic was really one of the highest one. So, but it's not because of the Czech Republic. It's because of it's not because of the nature of the taxpayers, as I'm trying to believe. It's because of the environment. And money invested into the value-added tax gap industry, it can be called industry, are coming from abroad pretty often. So, if we want to really try to describe the tax morality in different countries, we might consider that the value-added tax gap, at least from 50 up to 80%, it's created by the carousel frauds and the similar frauds, and the amount of the capital invested into this carousel fraud, it's coming from the abroad because it's a professional on the industry. Before you were selling drugs, and now you turned and you are stealing value-added tax. So it was. I think that in general the conclusions are fine to me, but if we want to make some strict conclusions, we might be careful and consider specific aspects of the value-added tax.
Okay. So should we talk about the export of VAT gap?
Yeah.
Or import?
Yeah.
Okay, Boris.
It's just been mentioned by Branko that how economics and economical theories affect the relationship between the taxpayer and the tax administration. And I also think that this has a very, very strong legal perspective as well. For example, in Hungary before 1990, it was not possible to appeal the second instance decision of the tax administration. So once the tax administration made a decision on the second instance, then it was done. So basically, a tax administrator was functioning as a judge. and this led to an enormous amount of corruption. So basically people went to the tax administration with branches of flour and boxes of chocolate to get the preferred result out of the case, and it was really very, very difficult to see through this entire issue. And as soon as the system was somehow revised and they introduced the appealability of National Tax Administration decisions at the court, so there were like 2 more levels up, then the phenomenon disappeared. And I believe that it's not only an economic point of view, but it's also a legal point of view that you always have to take into consideration. So when I think about tax morale, I think it's a strictly legal, sociological, and economical issue, and it cannot be separated one of the other. So it's just all of them has to be taken into consideration.
Okay, thank you. And one final intervention from the audience.
Thank you, Madam Chair. First of all, congratulations and thank you very much for all presenters for the excellent presentation. I'll try to be brief. You all spoke about tax morale or morality of taxpayers, but I am representative of tax administration, actually of the Ministry of Finance. I am tax treaty negotiator of Serbia, and I am asking a question. What about the tax morale of tax administration? Is it an issue or not? But with that said, I would like to go back on the issue yesterday on which we voted. The question was, would you allow treaty shopping when treaty shopping is used in order to promote bilateral economic relations between countries? I voted no, but many of you voted yes. So is there any connection about tax morale in that concrete case or not? So it is not taxpayers who are always guilty. Is it an issue, tax morale, on the side of the tax authorities? Not only politeness, on which some of you spoke already. Thank you very much.
I have a bribe variable, but I don't want to talk about it, okay?
Well, if I may answer from the perspective of the Czech Republic, currently I think it's quite an issue because usually we don't have problems with tax morality of the people working for tax authority. However, tax authority as itself sometimes is going beyond the law. And people are, let's say, requiring more information from the taxpayers than they are allowed, and so on. I wouldn't maybe call it tax morality, but if you are motivated to collect more and more taxes, and it's in connection with your salary as being a civil servant, then maybe you search for collection in cases that normally, if you wouldn't be motivated but by such a way, you wouldn't. Okay, thank you for the attention, and I'm passing the floor to Sveta.
Stjepan, please join me here, because now we have a particular pleasure to end this conference with something which I think is exceptionally important. So please, you sit. I'll stand. Now, we decided to close this conference, which is now 2 days running, with showing that, again, pointing out that it's not complimentary to us that we don't know what's going on next door. And Stjepan is very special, and I thank him for being here with us, because he was awarded in 2017 the European Tax Thesis Academic Award, which is issued together by the European Association of Tax Law Professors and the European Commission. So his thesis, and Stjepan works at the University of Rijeka, has been the most acclaimed doctoral thesis in Europe in 2017, and he was lucky enough, and we are lucky enough, to have his thesis published by the IBFD in their doctoral series, Nexus Requirements for Taxation of Non-Residents' Business Income, a normative evaluation in the context of the global economy. Now, since Stjepan and I, now we just have one book, the live copy, but if you would like, please, here I have some samples from the IBFD, and because Stjepan and I share a link with the IBFD, here have some materials on the books you can purchase there, academic courses, as well as the Advanced Master in International Tax Law by the IBFD. Now, I am going to use one example which I teach here, and it's often difficult to keep students awake. Usually that's because of the poor quality of my lectures, but there is one example with respect to the digital economy that I use because I know it will wake them up, and I hope you will not go to sleep because of it. And it's a Hungarian example. And it goes on, and Stjepan is now smiling because he probably knows what I'm going to show, but it's, so the largest tax case in Central and Eastern Europe was related to the wealthiest Hungarian individual. So the richest Hungarian, and it's a pornographic case because this man is the owner, and this is why I tell it to students because then their eyes light up. He's the owner of Jasmine.com. It's a very famous pornographic website. Now, the website content is taped in Hungary. The company owning the intellectual property, the website, is in Luxembourg, while the servers are in the island of Madeira in the middle of the Atlantic. And the Hungarian tax administration raised criminal tax evasion charges because of where is the place of supply with respect to value-added tax. It went to the European Court of Justice, and but anyhow, this is what we are now dealing with. We are dealing with where is the place, where is the nexus between companies, businesses, people in this new brave world where, you know, at a push of a button, everything is available. But where is this business being done? Where is the connection? 2 years ago, at night, the French tax police burst into Google offices and arrested whoever was there and said, Google owes us, I think the figure is 2 billion euros. And in the end, because Google is making billions by doing business in France, by selling marketing space in France, and it just has a handful of employees because everybody's in the US, and maybe a few people doing market research are in France, but they don't need anything else. And finally, even though French courts can be very patriotic, the French courts overruled the decision by the French tax administration and said, we would love to put these US guys in jail, but we just can't read that in the statute because the link between the income and the business is just not there. And in our friends from Poland that were here with us, Malgorzata from Lodz. Now in Lodz, where the ETLP conference in 2017 took place, where Stjepan received his award, now the hotel where most people were located is called Manufaktura, okay? Now Manufaktura is today one of the largest shopping malls in Europe. It's enormous. But in the 19th century, that was Europe's largest textile factory, employing at one single location more than 40,000 employees. And the courtyard of this, what used to be a textile factory, now it's a shopping mall and a hotel and various other things, is just enormous. It's many, many football fields. Now, this doesn't exist anymore. When you pass through this, you see these huge factory doors, furnaces, enormous plants. But that's not how business looks like anymore. And just to tell you one more thing which will raise interest, because Stjepan is dealing with this. And I'm not commending anybody's age, but if you can remember the 80s, think of your holidays. Were you capable of working on your holiday? And how heavy had your luggage had to be if you were to bring your work to your holiday? The books, the archives, the paper, heavy, and how expensive were the calls? Today, decision to work or not to work at our vacation is no longer objective. it's subjective because, just the laptop, a Wi-Fi connection, and here we go. So this is something that Stjepan was dealing with, and we are very proud to have him here. So Stjepan, please close this conference, and you have the floor.
Thank you very much. Yeah, first of all, I would like to extend some sincere words of thank you to the organizers of this remarkable IFA event, especially to Svetislav, of course, because he's the main reason I'm here with you today. He suggested that we can include this little book promotion within the umbrella of this conference. And just one quick side note, why this sort of events are important, because we need international tax dialogue. We need it not only between our countries, let's say the CEE countries, we need it on an even wider scale, but especially in this region, I think we need to talk to each other. And I'm really sad to report that in Croatia, in my country, unfortunately, we do not still have serious debates, serious discussions about topical issues of international tax law. For example, if we remember what we heard yesterday, the presentation by Professor Danuše about really technical issues of tax treaty abuse, the PPT, the MLI, the LOB, that sort of stuff. It's really hard to find a good discussion about those kind of issues in Croatia. That's why we at University of Rijeka, we really like to, let's say, expand our horizon. We need to cooperate with other universities, with other institutions around Europe. Secondly, I would like to thank my publisher, the IBFD, and I think IBFD is really a household name in international taxation, and I'm sure that you are familiar with the IBFD and its publications. They always try to be at the forefront of research in international and EU tax law. Coming back to the substance of my book, it's pretty late. So I will spare you the details. I will not go into a detailed account of the contents of the book. Of course, I love the Svetislav's example, and I also love the fact that he mentioned Google. So my question to you, and right now I'm looking in the direction of Mr. Davidić, who knows Serbian treaties by heart. Can Serbia tax business income of Google under current rules of international tax law? Can Serbia impose tax on Google?
Let me check on Google.
I don't think so.
Yeah, because what are the requirements for imposing taxation on Google? Either Google has a subsidiary which is resident in Serbia, which I don't think they have a subsidiary in Serbia. They have subsidiaries in a number of other European countries, but I don't think so in this particular country, definitely not in Croatia. Or, second requirement is that Google has a PE, a permanent establishment in Serbia, according to relevant articles of your treaty between Serbia and Ireland. Why Ireland? Because Google is registered, of course, in Ireland. Its headquarters are in Ireland. So basically, why is this an issue? Because Serbian clients, Serbian businesses, pay online advertising services, fees, to Google in Ireland. But under the current rules of international tax law, Serbia gets zero. Because it is prohibited to impose tax because of the current rules of international tax law. If there weren't a treaty, and this is something that I explore in detail in my thesis, in a non-tax treaty context, in a number of countries, and I'm pretty certain that Serbia is also one of those countries, you can impose a withholding tax on outbound business income, on outbound services income.
This is a pretty standard solution even in some developed countries, especially in the developing world. And I think the best example of this practice is Brazil, because in Brazil it's virtually impossible to avoid, to pay withholding tax on any outbound payments. In my book, I ask a really fundamental question: is this fair? Should something be done about this? Should, in this particular example, Serbia have the right to tax Google? Because when you think of it, Serbia would have the right to tax Google if there was some guy from Google acting on behalf of Google Ireland, signing contracts. Or if Google had a little place in Belgrade, a couple of square meters of space, which is an office under a relevant tax treaty. So under these conditions, Serbia would be able to tax business income of Google. And let's remind us that this is a really big difference. So we are speaking about millions of euros, potentially. So why is this relevant? Why is this physical presence requirement relevant in modern economy? Because current rules, the PE rules, were invented 100 years ago, almost 100 years ago, in an environment of iron furnaces, of big factories, and so on. So my hypothesis and my argument in my book is that these rules do not fit modern economic environment anymore. And we need some kind of changes in order to give more taxing rights to the countries that I call, not only me, but also other academics in this field, the countries that we can call market states, the countries that provide customer market to big multinational companies like Google, like Facebook, like any other company. So basically, this is a really fundamental question that I pose, and I try to use some theory behind it. This is a question about the justification to tax. When do you, as a multinational company, become a member of a society? When do you owe some distributive obligations to other members of this society? Is Google a member of Serbian society? And my answer to this question, and this is something that I propose, is that you should use a quantitative threshold. So when a company derives a certain amount of income in a country, and we can talk about the number, it can be 1 million, a couple of millions, whatever, then you become liable to tax in that country. Some interesting developments have happened since I finished my book. One of the most significant developments has happened this year when European Commission has proposed for a new directive on what they call significant digital presence, or SDP. We're talking about acronyms again. So this SDP is basically a new PE deeming rule, which basically uses the same logic as me in my book. They also use some other tests. For example, if you have a certain number of users in a country, then you become liable to tax. Also in India, on a unilateral level, India now uses something called significant economic presence, where they also use revenue thresholds. And those among you who are dealing with VAT, for example, with indirect taxation, there has been a really important decision of the US Supreme Court issued in June 2018, the so-called South Dakota versus Wayfair case, which basically what the court argued is that physical presence is no longer a requirement for imposing a tax. In that particular case, a sales tax, because the US doesn't have a real VAT. Just to round up my discussion, also on the role of academia, I think we in academia are in a really comfortable position because we can think about those big ideas. We can, you know, somehow extract from the technical details something which is fundamental. So that is why some people may find arguments also in this book a bit utopian. But I think this is the role of academia. We have to be provocative. So that's why you can, I mean, I'm not provocative as Svetislav was with his pornographic example. But anyway, this is something that that I want to convey as a message to you, and hopefully you will be interested to read this book. You, by the way, you can order it on IBFD's websites. It is available in a print edition, but also in an online edition as a PDF. So thank you very much.
Professor Popović, please.
I'm really pleased that Mr. Gadžo is with us today, that we were able to hear his presentation, actually the presentation of his doctoral dissertation that has recently been published by IBFD. The problems he was dealing with are actually the problems of a fundamental nature. It was in 1923 when a group of 4 economists, Einaudi, are there any Italians anymore here with us? He was subsequently the president of the Italian Republic, Professor Seligman from the States, Professor Browns from the Netherlands, and Professor Stamp from London. They were delegated by the League of Nations to design the first rules of game in the international taxation. And all the concepts we are now dealing with, the concept of residency and the worldwide income, and the concept of source with the limited tax liability, territorial principle, those were the instruments, the tools, those 4 economists introduced into the subsequent model convention prepared by the League of Nations and inherited by OECD and UN in the period after the Second World War. But as you have properly said, that happened in the era of industrial society, when the fixed place of carrying out business was the determinant of permanent establishment. It was very easy to find the nexus in these days. There were some problems, and they were aware of them, but definitely they couldn't have the perspective that within less than a century we will have a digital world in which these basic concepts are now to be reconsidered. And that is one of the most important tasks that we in academia are now facing. How to modify these factors, connecting factors that are creating worldwide income liability or territorial principle liability. In order to keep international tax law going on, we have to face these challenges to try to solve them. And I think that your book, I haven't read it so far, but from the presentation and from some comments in the literature, I am aware that you are on the trail which is the real one.
Thank you, Professor Popović. It just testifies what Professor Popović said on the relevance of Stjepan Gadžo's work. The brochures are here. Please go through them. There's a sample chapter as well, and also informative material on what IBFD is doing. And this brings us to the end. So 2 days, we have had 30 panelists, I think that there were, on average, more than 100 of people in this room. We'll get a bigger one next time. I hope that the conference was interesting. I hope that our guests will come again. And I wish to thank you all for all your support, for your patience, and if there were any mistakes, we're amateurs, so please excuse us, but we are of good heart, and thank you, and this is your house, so come back again. Thank you.